Good day, my dear students. I want to officially welcome you to today's class. The class is supposed to have been held on Monday, but due to my inability to upload the video. However, I want to commend your efforts on your understanding of the topic taught during the WhatsApp discussion we had on Monday. So for those of us who might still have issues with the topic, I'm sending you this video. We will be analyzing business transactions, and don't forget I told you in the class that we have two types of business transaction. You have your cash transaction and you have your credit transaction. So I'll just give one or two examples to conclude the topic. So we're looking at February 3rd, 2020, paid salary by cash, 20,000. I told you the first step is to determine the type of transaction you have, which tells you that that is a cash transaction. So after that, the next thing you now do is to determine the two accounts you're to prepare. Don't forget that one of the two accounts must be a cash account. I would always say that must be a cash account. The second account will now be what was that money used for. In this case, the money was used to pay salary. So my second account will be my salary account. That is step number 2. Step number 3, you're now to determine between these two accounts which one is giving, which one is receiving. We all know that when we go out to make payments, we remove money from our purse. So let us assume that our cash account will represent the purse. So my cash account will give out because I am making payments. My cash account is giving. And then for my cash account to give, automatically my salary account is receiving. Following the golden rule, therefore, you are to credit the giver and you are to debit the receiver. So the last step, you draw your ledger. I have my cash account, debit, credit. Don't forget your Naira symbol. I also have my salary account, debit, credit. Your debit will always be to the left and your credit to the right. So your cash account is given. The meaning is that when you come to the cash account, you're to record it on the credit side. You're to write that transaction on the credit side of the cash account. So I have my date as February 3rd, 2020. Cash is given to the other account, which is salary, the sum of 20,000 Naira. For there to be a credit entry, there must be a corresponding debit entry in my salary account. So I have February 3rd on the debit side. Salary is receiving from cash the sum of 20,000 Naira. So that is that about this example. We will now treat February 15th. Paid insurance premium by cash, 1,000 Naira. So let's go with the steps. We know that this is a cash transaction. Step number 2, I will have my cash account and the money was used to pay insurance premium. The money was used to pay insurance premium. So my second account will be insurance premium account. For this, just like the last example, your cash account is given. So cash account gives because you're making payments. If you're receiving money, your cash account will receive, while my insurance premium account is receiving. Don't forget that your golden rule states that you credit the giver and then you debit the receiver. So I will draw up my ledger. I have my cash account. To the left, I have my debit. To the right, I have my credit. I also have my insurance premium account. Insurance premium account, debit. So cash is given. I'll come here. February 15th. Cash gave to insurance premium. Permit me to abbreviate that. The sum of 1,000 Naira. Please don't let us forget our symbols. And then my insurance premium is receiving on the 15th 5th of February, I received from cash the sum of 1,000 naira. So for there to be a credit entry in your cash account, there must be a corresponding debit entry in the insurance premium account. So we'll be analyzing a credit transaction. What is a credit transaction? A credit transaction is that transaction for which payment is being made at a future date. If you look at the two examples we have gone through, payments were made immediately. But in the case of your credit transaction, your payment is made at a future date that you and the seller have agreed upon. So for that type of transaction, the steps still remains 4. But in the case of your cash transaction, because you have an exchange of money, you have cash account. But in your credit transaction, there is no exchange of money. So what you will have there will be the name of the debtor, who happens to be the buyer, or the name of the creditor. Your creditor is the seller. So let us analyze one transaction and then bring the class to an end. So we have example 3. Some goods were bought on credit from Haja Sunny at 3,500 naira. Now, that is a credit transaction. We have been able to fulfill the first step, determine the type of transaction you have. From the question, you can see that the goods were bought on credit, which tells you that that is a credit transaction. So the two accounts involved, one of it will be the name of the person who either sold the goods to you or who bought the goods from you. In this case, Haja Sunny sold goods to you. Haja Sunny is your creditor. So one of the accounts you'll be having there will be Haja Sunny account. And then the second account was what was it that was bought. In this case, goods were bought. Goods bought in accounting is referred to as purchases. Goods sold in accounting is referred to as sales. My dear students, you can only use sales or purchases when the question states that you are dealing with goods. If the question says bought office furniture, please don't use purchases or sales. What was bought in that question was an office furniture. So the second account will be office furniture account. But as far as this question is concerned, some goods were bought, and when you buy goods, it becomes purchases. So my second account there will be purchases account. You now have to determine who is giving, who is receiving. You know that when you go to Haja Sunny shop, she's giving you goods. So you have Haja Sunny is giving. So for Haja Sunny to give, your purchases account will receive. So drawing up our ledger, following the golden rule, you're to credit Haja Sunny and you're to debit your purchases. So I have Haja Sunny, short form of my ledger, debit to the left, credit to the right. I have purchases account, debit to the left, credit to the right. My Naira symbol. So from our analysis, we said Haja Sunny is giving. I will now come down here. Haja Sunny gave to purchases the sum of 3,500, while purchases will receive from Haja Sunny the sum of 3,500. For there to be a debit entry on my purchases account, there must be a corresponding credit entry in Haja Sunny's account. So my dear students, that is that about analyzing business transactions. But before I bring the class to an end, I want you to put one thing at the back of your mind. Whenever you draw your ledger account, please make sure that on one of the accounts the transaction is appearing on the credit side, while the other will appear on the debit side. If you have one transaction having on the debit side, the other will appear on the credit side. On no account should both ledgers be recorded on the same side. If you have done that, then you have made an error in your analysis. So until we meet again next week, stay safe, stay home, and God bless you. Bye for now.